Good morning, everybody. This is Jacob here. Today, we're talking about trend versus counter trend strategies and why it's important to have a good mix of both in your automated trading system portfolios. It's very important to have a mix of both, and you'll understand why very, very shortly. Before we get started, hello, my name is Jacob Amaral. I build, code, and trade on the futures market with automated trading systems with my own capital. If you want to learn more about automated trading systems and trading bots, see the links in the description below. So let's talk about trend versus counter trend. Let me go down here. All right, so in this example here, this is a counter trend strategy. All right, so this system trades NQ 1 minute bars. NQ is NASDAQ futures. And if we look at some of these trades here, we can see like this buy, for example, right here. Zoom in. Zoom in never really works well. I can never get it working correctly in NinjaTrader. Let's look at this buy here. You can see that, on this day, this was June 7th of this year, NASDAQ gaps down, so it's lower than yesterday's close, and it's still hovering around that area, and then the system decides to buy. Now, obviously, that was a profitable trade. It may not always be profitable, but the reason why it's a counter trend strategy and kind of the definition of it is, it's going against that trend, right? Right now, the trend is down, right? Price is not higher than yesterday. It's sort of hovering around this area, and most traders would think, okay, I want to short, we're making new lows, I want to start shorting. And sometimes it's good to go against that trend, right? When building trading systems, obviously you're going to back test them and test them out of sample to see if there's some edge there. And sometimes there's edge in counter trend and edge in trend. But that would be an example of a counter trend system. If we look at a couple more, if we look at this short here, the system actually bought this dip here, sold for a profit, and then it actually went short. And you can see that that's a counter trend. It's shorting at the top, of definitely the top of the day. And now you're higher than yesterday's close. Yesterday's close is in this circle here. That's where yesterday closed. You're up here, you're making new highs, and then you're going short. So you're going against that trend. And that's what the system does, okay? So counter trend systems are good to have in your portfolio, especially for days of choppiness, days of no trend, essentially. You're going against that trend. On this day particularly, let's highlight it. Session closed around here. We gapped down, made new highs, way new highs, and then it actually closed down near where it opened, right? So a lot of choppiness, no direction, and counter trend strategies would do well on that day. So that's a counter trend system, all right? Now, trend systems are also good. Trend systems are also very good. I'm going to show you an example of another trend system. This system trades NASDAQ 30-minute bars, and we can see on this day, June 17th, the market just kept going up, and this system just kept buying, hit profit target, buying, hit profit target, buy profit target, and killed it that day. What made did have one losing trade near the end of the day, but was able to have four winning trades in a row. And why is it a trend system? Well, when this session opened, which would be probably around right here, right? It just kept making new highs, right? So you're buying that breakout. That's essentially what a trend system is. You're buying that breakout to one direction, okay? Now this system has a relatively small profit target, so it tends to keep re-entering on those breakouts, and it's catching all those moves. Okay. Let's look at one on the short side. This day too, we had gap up and just continuation, a trend upwards. It's going to keep buying and keep hitting that profit target. Where a counter trend system may not do well this day, may keep trying to short, right? Keep shorting and stopping out, where a trend system is going to do really, really well. Now let's look at days where trend systems don't do too well. I'm trying to find a day here. More of a choppy day. Here's sort of the short side working. We get a gap down. It keeps shorting, stops out here shorting. So there's, you're making new lows, and that trend system's following that trend. But it doesn't always work. So for example, this was one of the poor days. NASDAQ gaps down quite a bit, 300 points, from the previous session close, and this system keeps trying to short. It gets one win here, but that day NASDAQ mean reverts. It starts filling that gap. It starts, although it did gap down, it starts trending upwards, right? You have that big gap, and now NASDAQ is starting to trend up, right? But on a macro level, it's sort of a counter trend, right? You gap down and then you start, going back up. And that's when the system, look at all those losses, stop loss, stop loss, stop loss. So that's when a trend system doesn't do well, where a counter trend system would excel on those types of days where it's going against that trend. So the question is now, how do you, when you're building your portfolio of trading systems, and I've preached this many times, to be successful in automated trading, you need multiple trading systems in a portfolio, all right? Think about Renaissance, Citadel, Jane Street, Two Sigma. They have thousands of strategies running, right? They're not running one strategy. You will never be successful with one strategy. It may work for a month, 6 months, but eventually it is going to decay or not perform as well until that next run up, and you need multiple strategies. So when it comes to trend and counter trend, how do you decide how many counter trend or trend strategies you need? Well, it's simple portfolio calculations. On my screen here, this is an Excel sheet with all the strategies we've built within our group. To join our group, you can see the links in the description below. And we have a portfolio calculator tool that shows you the calculations of your max drawdown required margin. And what I want to show you is that, so in this sheet here, each one of these columns is a different system trading together. These two systems we recently built, and I want to show you what happens when I take them out. So if I go to the portfolio calculator, right now the max drawdown is $44,000. Okay, so the max drawdown is from the peak of the equity curve to the lowest valley, right? The highest peak to the lowest valley. So in a visualization perspective, you can see this equity curve, although it looks very smooth, if you actually look at the periods where it starts kind of curling down a little bit, those would be drawdowns, and they're actually bigger than you think. It just looks very small because this graph is really big, but these drawdowns can be big, $20,000, $30,000, $40,000, right? So anytime it drops lower from a high, that's a drawdown, and the max drawdown is the biggest one, the biggest difference from that highest peak of the equity curve to the lowest value. So right now it's $44,000, right? And if I take out these last two strategies here that we developed, so I'm just delete them and go back to the calculator. Whoa, now the max drawdown is $50,000, right? So why did that happen? Well, those strategies actually lowered the max drawdown, right? And what that means is during a bad period that the portfolio usually does bad, those strategies actually made money, right? They were able to capitalize on some of that alpha during that period of drawdown and lower your max drawdown, okay? And actually those two strategies were counter trend strategies. I know you couldn't really tell, but I know because I developed them. But those strategies actually reduce the drawdown. And that's the beauty of trading a portfolio. I just put them back in, so now of course it went down to 44,000. That's the beauty of trading a portfolio. You can actually add strategies that will not only make you money, hypothetically in the back test, real time, you never really know until you start tracking it. But hypothetically could lower your drawdown by adding strategies, right? Obviously you could take out strategies that will reduce your drawdown. And if you have too many trend strategies, your max drawdown will be massive because on the counter trend days or the reversal days, you won't do so hot. So as far as the right mixture of trend and counter trend strategies, you have to test it. You have to, once again, use a tool maybe like Excel or a portfolio tool where you're adding and removing strategies and you're seeing how that max drawdown changes, and getting to a point where you have a goal and you want to reduce that goal. So maybe your goal is, hey, I don't want to max drawdown more than $20,000. So now you need to start adding and removing strategies until you kind of reach that goal of that max drawdown, right? And it may be 50% counter trend and 50% trend. Maybe it's 70-30 trend counter trend. But there's no right percentage level. You need to test it and set a goal of what your max drawdown you want to be, and then add and remove strategies to do that. So those are the basis of trend and counter trend strategies. Like I said, you want a mixture of both in your portfolio for sure. You don't want all trend strategies. There is slight exceptions where you could have all trend strategies if you're trading a really diverse portfolio of different instruments, then that could work for you. So if you have a trend system on oil, trend on gold, trend on NASDAQ, trend system on maybe wheat futures, soybean futures, much different instrument types and sectors, then you may be able to get away with it. But once again, you've got to test your portfolio, test how your max drawdown changes when you add and remove strategies, and get it to a point where you're reaching that goal. Okay, so once again, important to have trend and counter trend. Counter trend is going against the trend. It's going against kind of what the market's doing, and trend is following what the market's doing. And it's important to have both. So anyways, I hope I provided some value today. Hope you learned something about trend and counter trend. Let me know in the comments below, and we will see you next week, guys. Have a good one. Bye-bye.